Hey guys, what's up, how's it going? My name is Rob and welcome back for another video. In today's video, I'm going to be giving you guys a monthly update for my Wealthsimple trade dividend based stock portfolio. I have 3 portfolios in Wealthsimple trade, so I'll be going through them all today. I'll show you guys what my holdings are. I'll give you guys an update on the dividend income and how many dividends we've basically been earning in the portfolio over time. And I'll show you guys what my stock holdings are and show you guys what stocks are doing well and which stocks are not doing so well. So this video is going to be more of a thorough update. We'll go inside the portfolio. I'll show you guys all that kind of good stuff, and I'll give you guys an update on how things have been going for me, and I'll give you guys an update on what I'm kind of looking at for the month of October and what I think is really basically going on in the markets and whatnot. So if you guys are brand new to the channel, the goal of this portfolio is basically to kind of get started with investing in a very easy way, and that's kind of where I found Wealthsimple Trade. I first started with Wealthsimple Invest using a robo-advisor to basically put all the free cash I had away into a portfolio, and while I was learning about investing and learning kind of what I wanted to do, this robo-advisor basically made income for me. So once I got more educated and I figured out that I wanted to focus more on dividend-based stocks and dividend growth-based stocks, I turned to Wealthsimple Trade and I started doing my own trades and buying my own stocks. That's basically where we got to where we are today. And once again, the focus is on dividend growth and combining basically a balanced approach of everything, so that we're getting a little bit of growth stocks, we're getting good exposure, but we're also getting dividend stocks, because I do at one point in time want to eventually get to the point where we live 100% off this portfolio. That's the goal at the end of the day, is to kind of get those dividends up, get the growth up overall, combine everything together, and number one, just make my life easier, allow myself to work less as I get older, and hopefully one day live entirely off the portfolio. And of course, these videos in this series and this type of investing is very, very much geared towards beginners. Just like myself, I don't like to complicate things. I'm kind of really just a regular everyday guy at the end of the day who just works a regular job, and I'm looking at some way to make some more income online, make some passive income with investing, and that's basically what I've been doing. And my goal here is to show you guys how easy it is to do with Wealthsimple Trade. So if you guys want to sign up and you guys want to follow alongside with me, which I highly encourage you guys to do, there's a link in the description of the video. You guys can sign up and you get 2 free stocks from Wealthsimple Trade. Definitely check out Wealthsimple Trade. It's commission-free trading. It's a simple way to get started, and I highly, highly recommend it. And before we go any further and I show you guys basically how my portfolio has been doing, I just want to comment really quickly on the market update. There's a lot of things going on in the market right now, and whenever we see these dips, a lot of people freak out and whatnot. And I haven't really published too many videos on my channel, and I'll talk more about that towards the end of the video, why. But I just want to give you guys a quick little reminder that, whenever markets dip, always look at it as a good opportunity to buy. And there's been lots of good opportunities to buy. And you got to remember, at the beginning of the year of 2021, the markets rose up quite a bit, and we've just seen the markets rise, basically every single month. So now that we've seen this dip, it's actually, the markets are still up quite a bit. It just, remember, like, the news and the media likes to make it seem like whenever a dip happens, the world is going to end, but that's not the case. We're still doing quite well, and you guys will see that as I post this update on this video. But nonetheless, whenever markets dip, it's always a good opportunity to buy stocks, because whenever they dip, as long as you're buying good quality companies and you're buying good quality ETFs, when the rise does eventually come, you're going to take advantage of that. So I just want to comment on that really quickly. Don't feel bad about the market dips, about the markets dropping. It's completely normal. Just look at it as an opportunity to buy stocks at a discounted price. So a quick little update on the portfolio, and I'll show you guys, basically explain all the portfolios for you guys really quickly. So we have $98,000 in total on Wealthsimple Trade, and keep in mind, once again, guys, we built this portfolio completely from scratch. Except for some of the TFSA that we traded into the other TFSA, which I'll talk about that later on. Pretty much built this portfolio from scratch since the beginning of 2019. So I know that doesn't seem like a lot of time, but if you stick with it, you put your money in, and a lot of that growth has actually come from, a lot of that value in the actual portfolio came from growth as well. So just kind of keep that in mind. It does add up at the end of the day. So we have 3 portfolios. We have a personal account, which has $9,153. The personal account is our dividend-based portfolio. It's the one we're kind of focusing on now because we did use up all of our TFSA room. We have an RSP that we just started that's going to be focused on growth-based stocks, going to be US and Canadian growth-based stocks. And then we have the TFSA, which is our oldest account that we've kind of been building from scratch, and we have $88,000 in the TFSA. I'll do an update on the TFSA because it is the biggest account, and the personal account basically is almost like an extension of the TFSA, just without the US stocks. So we have a little bit more US stocks, and I'll give you guys a full portfolio breakdown in just a second here. So over the past day, our TFSA is up 1%, so we've seen a bit of a rise from the previous dip that I was mentioning. Over the past week, the portfolio is sitting at about 0. So once again, a little bit of a dip, a little bit of a rise, kind of just tends to happen. Over the past month, we're still down negative 2%, so we've seen a pretty significant dip overall over the past month. So this is basically telling us that now is a good time to buy stocks because everything is down quite a bit. Over the past 3 months, we are about breaking even. And then over the past year, we're up 7%. And then all time, the portfolio is up 7%. Keep in mind, though, that in August, we deposited $50,000 inside this portfolio. So this $5,000 is mostly just from the $30,000 that was in there. We deposited about $50,000 from another portfolio that's up $11,000. So if you wanted to get the real total, add $11,000 to the $5,000 and you'll get the real percentage of return from this, both the portfolios combined. But because we put them into Wealthsimple Trade, it doesn't track that. So unfortunate, that's just the way it goes. But just a quick little update on the TFSA. And the stocks that we're holding inside of our TFSA are pretty basic stocks. We have ones like Algonquin Power and Utilities. I'll give you guys a quick little update to show you guys which ones are doing good, which ones aren't. So Algonquin Power and Utilities is probably down the most, down negative 10%. They've had a rough past couple months or year, I should say. But this is still a good quality stock. At the end of the day, definitely one you want to take a peek at if you guys are going to buy one during the dip. We have Alimentation Couche-Tard, which is one of my favorite consumer-based stocks. I have big plans for this company. I'm going to be investing into them a lot in the future. They're sitting about 0% in the TFSA. And keep in mind, we bought these stocks at different points. Some of these stocks are newer to the portfolio, so they don't have as much gains. Some of them we held since the pandemic, so like the gains are up quite a bit. And you'll see that as you go through this video. We have CNR, another good quality company. We have Fortis. We have H&R REIT and RioCan, which is our REITs inside this portfolio. I think we have about 5% real estate. So I was going to sell them, but I might just keep them just because I like the monthly income and I like the 5% of your portfolio in REITs is not that big of a deal. We have Manulife, some more finance companies. We have TransAlta Renewables, Severia Corp, TELUS, TD Bank, which is my favorite one. And you can see TD Bank is up 22%. But once again, that's because we did hold it since the beginning of the pandemic. So the pandemic came, everything crashed. We bought lots of TD. Things went back up. That's why we see that nice big gain. So once again, whenever there's dips, it's always good opportunities to buy for that reason. And then we have VDY, which is our main ETF. We hold $26,000 in VDY, up 7%. And then VFE is our US growth-based S&P 500 fund, $50,000 inside the TFSA. Once again, we want that US growth. That's tax-free, up 2% overall. Keep in mind, we did buy a lot of shares recently, so that's why the reason it is. But we want that good tax-free growth. That's why we have the VFE in there. So just to give you guys a quick little recap on that, I hold 3 portfolios with Wealthsimple Trade. We have our TFSA, which is our main portfolio. We have our RSP, which is going to be our growth-based portfolio. And then we have our personal account, which is more of our dividend-based portfolio. And we have these accounts for different tax reasons. I'm not going to go into them in today's video too specifically. But basically, if you guys are just getting started, focus on your TFSA. If your TFSA is already maxed, and you can go on an RSP or you can focus on a personal account. It's up to you guys. But just the main point I want to make is like get that TFSA maxed, start investing right away, and then over time you can kind of worry about how you want to kind of manage your accounts from different tax perspectives and whatnot. And if we head on over to Track Your Dividends, which is a website we can use to kind of take all the portfolios, combine them together to get some basically summaries and some basic overall averages here. So if we take all of our portfolios together, we add them together, we have an average dividend yield of 2.54%, which is a little bit on the lower side, but keep in mind we do hold a lot of growth-based and dividend growth-based stocks, so the dividend yields aren't super high right now, but these are companies that are growing their dividends on a regular basis, so we will expect that to grow over time. Our yield on cost is 2.66%, our annual income is $2,481, so I guess that would be about $200 or so a month, something like that, so $200 in dividends a month, not too bad. And that's just some basic facts for you guys. If we go over to diversification, I'll show you guys a quick little overview of the individual holdings of the account. So we have 14 holdings in total spread across all the different accounts. Our largest holding is VFE, like I mentioned, 50% of our overall portfolio. Once again, a lot of this is because a lot of it's in our TFSA, and I want to take advantage of the TFSA tax-free savings growth. I'm not a high income earner, so I want to make sure we take advantage of that growth because the S&P 500 has some of the best growth in history, and if I put it inside a TFSA, it's all tax-free. The dividends are not tax-free, as a lot of you guys have pointed out, but that doesn't matter to me because we're after growth. And we have total sectors of 7, and our largest holdings are ETFs, which represent about 80% of the portfolio. So once again, 50% VFE, as you guys can see here, and then 30% VDY, and then the rest is just these individual stocks like I've already went through, like the TD, RioCan, Manulife, H&R, and some other ones here. So once again, I'm a big ETF guy, but that's the basic format of the portfolio. So as you guys can see, my stock holdings are pretty basic. There's nothing too complicated here. My main focus once again is on ETFs. I'm a big ETF investor. I like to buy the overall market. So I'm buying the overall US market because the US market has some of the best growth in the history. It's also one of the biggest economies in the world, and we've seen that. So it makes sense to hold a lot of US stocks inside your portfolio, even if you are Canadian based. So I have the bulk of my portfolio, about 50% in US stocks, and then have about pretty much the rest in Canadian stocks. And over time, as my portfolio grows, I might kind of spread a little bit of that to be internationally. But when you're just getting started, you know what, I would say focus on US stocks and focus on Canadian stocks. And if you do that, buy some good quality ETFs and you're going to do quite well. And if we take a peek at the dividend payments, here's the dividend earnings from the portfolio. I like to show you guys this, and I like to see it myself because it feels good to see those dividends coming in on a regular basis because you know you're making money. So the most recent dividend payment we got was on October 5th from H&R REIT. We got $7. TELUS gave us a dividend of $10 on October 1st. And actually $15 if you include the TFSA and the personal account. We have CNR and some other ones going into September. And since it is the beginning of the month, we should expect some dividends from both VDY and VFE. And these would be some big dividend payments. So we're just kind of waiting on those to come in. I think they come in on the 8th. I'm not too sure about that, but I think it was October 8th. And you guys can see here, even last month, we got a $94 from VDY. So we should get a good dividend from VDY, and we should get a dividend from VFE as well. And when I first started the dividend payments on this account, it wasn't a lot of money. It was a couple bucks here and there, even a couple cents in some cases. But as you guys can see, the dividend payments are starting to add up, even getting a couple $100s from different ETFs on a regular basis. And what we'll do right now is I'll jump aside the actual spreadsheet that I keep where I've tracked my dividend income month by month since I first started this portfolio. So let's jump aside the spreadsheet, and you guys can really see how the growth of the dividends have grown since we first started investing with this portfolio. And here's a dividend spreadsheet to show you guys how much the dividend income has grown since you first started investing. So look at this as a source of inspiration if you guys are brand new, because no matter where you are, you might be on your first month, you might be on your third month, you might be on your sixth month. Things do grow. Now, I've been aggressively growing this portfolio as much as I can, putting as much free cash flow as I can possible. Some months more than others. Some months I've put a lot, some months I didn't put anything. So just kind of keep that in mind. In the beginning, I was really hardcore and I put as much as I possibly can. And I think that's the most important thing to focus on when you're just first starting out. Put as much as you can, because the quicker you can get that snowball growing and rolling, the faster it's going to grow, kind of thing. And you guys can see that the portfolio and the dividends have just been consistently growing over time. We're all the way up to month number 22, October, and we're sitting at $22 in total for October and $159 for September, which is an all-time high. And I do predict October we might hit $200. I'm not too sure. I'm pretty sure we will with the big dividends we're going to get. But once again, pretty good consistent growth. And our total dividends in total are $1,033. That's our total dividends. If we add up all the months together in total, $1,000. We just broke $1,000 last month. So that's super cool. Finally, 21 months after investing, we finally hit $1,000 in dividends. But keep in mind, we're now making like $100 to $200 a month. So it gets up much quicker, you know, as it grows, it gets faster. You can see that that's a lot of growth, and that changes pretty quickly. And if we go to this cool little graph here, we can see how much the dividends have grown over time. So once again, just consistent growth overall. This right here represents last month on the month number 21, and then 22 is obviously October, which is a little bit lower because we just started the month. But you guys can see even in September, lots of consistent growth. It kind of almost like a wavy pattern, right? But one thing to keep in mind is that it's consistently going up. And of course, we're reinvesting those dividends over time. So once again, I just want to really kind of drill this in the side of your guys' head. I know in the beginning it can seem like it's a lot of work and your money is not really doing much, but over time with regular investments, being consistent, that's the key, is to be consistent. Over time, this money does add up, the growth does add up, taking advantage of opportunities when they come to you. This growth does add up, and you can see that dividend income and just the stock appreciation does add up and grow over time. So stick with it, be consistent. I know in the beginning it can feel like, oh, you know what, this is going to take forever, but you'd be surprised how, you know, when you get older, how quickly time goes by. And at the time of doing this video, this channel was almost 2.5 years old, and it goes by pretty quick. So just be consistent, stay with it, and that's probably the best words of advice I can give anybody who's just getting started with investing. And before we close this video, I just want to do a quick little update on how things have been going for me. I made a community post on this channel about, I think it was a week ago, saying that I was going to take a bit of a break. I needed to kind of just relax a little bit. So the past couple days, past couple weeks, I did take a big break. I didn't do much. I watched a lot of video games. I played some video games. I spent some time with my girlfriend. I basically was pretty lazy. I just need some time to unwind and relax. And I'm still probably not going to be on a regular posting schedule quite yet. But you know what, I had some free time today, I had some energy, so I figured, you know what, why not do a video? I might kind of do more like 1 or 2 videos a week kind of thing, and then go from there. But I'm still kind of enjoying the time I've had off, and I just want to remind you guys, like, don't be afraid to take time off. And this is why I like investing, because as you get older, as you kind of things happen in your life and whatnot, you're going to have to take time off, you're going to have to work less. But investing allows you to earn passive income that it doesn't matter whether you're working or not. You know, I could take a week off, I could take a year off work, and I would still get that passive income that I'm getting from my investments. So that's the power of investing. That's why I think it really is the smartest way to make money and to manage your money and your finances as you get older. So just wanted to kind of throw that out there and kind of give you guys an update on that. And I also want to say thank you for everybody who commented on that post. Sorry I didn't respond to your guys' comments. Like I said, I've just been super busy and I needed some time to relax. But I will mention right here, I do appreciate everybody who comments on these videos. The support you guys give me is amazing. You guys left some really nice words, so I just want to say big thanks to that. I really appreciate that. And that's pretty much everything I want to talk about in this video. So have yourself a good weekend, guys. Hope you guys enjoy it. Thanks for the support. You guys are awesome. And once again, I'll probably be posting maybe on a weekly basis. We'll kind of see how things go. Maybe more, maybe less. But I just want to do a quick little update today because I was kind of feeling like doing a video. So anyways, guys, take care. Have yourself a good weekend. I'll see you guys later, and bye-bye.